Welcome to Matters Financial and Geopolitical from a Frontier, and thank you for taking time out to come by. I do appreciate it. If you haven't had a chance to look at Christian Turner taking a spin in a Jaguar F-Type, please take a look at it. The link is on Rich Wrap-Ups and on the front page, and he's such a good sport, and I'm grateful to him for that. And also have a look at Felice of the Salvatore di Francesca tailoring company, and he was a great interview, I must admit, most enjoyable as well. And he's got this suit which apparently costs more than 25,000 euros, of which they make, I think, about 7 a year, and they're always sold out. My macro thoughts are Janet Yellen is a pussycat, and the dollar stays soft, and I think crude oil remains capable of spiking a great deal at any time. Home thoughts are my friend Peter Grest, and I wrote about this, some months ago when the trial first started. And I said he is an innocent in this Muslim Brotherhood, Al Jazeera, Qatar versus the rest of the GCC, Kuwait, Saudi Arabia, and Egypt fault line. And I think he remains there. And it's interesting that we have this enormous hullabaloo on social media. But ultimately, the real issue for Egypt seems to me to be that Qatar overstepped the line, that line about the internal and external aspects. And I think, it would behove Qatar to talk about this in an upfront manner. But that judgment was just truly appalling. I know him, and I know him very well. And it's just beyond Peter to be involved in such a matter, in a manner that is being alleged. And then coming back to Sun Tzu, the supreme art of war is to subdue the enemy without fighting. Isn't he right? Water scarcity may spark geopolitical conflicts. This is the Water Council. Water scarcity may spark geopolitical conflicts in such countries as those around the Tigris, Euphrates, and the Nile River basins, according to the World Water Council's president. Water and politics, they go hand in hand. And then talking about signs of transboundary water risks, Egypt opposes Africa's largest power plant being built by Ethiopia, saying it will reduce the flow of the Nile needed by farmers, while the conflict in Syria has been exacerbated by groundwater depletion, drought, and poor water management. And one of the areas they're citing is Turkey, Iraq, Syria, and Iran. Another water-stressed region is around the Nile, flows through 10 countries, including Sudan, Ethiopia, and Egypt, is another area of possible conflict, Braga said. I don't think he's wrong. On another note, the UNEP Executive Director, Achim Steiner, who I caught up with last week, very interesting fellow, wanted to come on Mainspeak, saying the illegal wildlife trade is about a $200 billion a year business. And it's a threat to national economies. I love this quote from the Fendi CEO, Pietro Beccari, who says, he was talking about Rome, but I think he could be describing any city. And he's describing a city saying, it's about tying us with the city that makes millions of people dream. Isn't that a wonderful way to describe what a city should do? He's describing Rome. Owning Rome for us is extremely important. It's about tying us with a city that makes millions of people dream. And then he says consumers don't want to just buy a product, they want to buy a set of values. I think he's quite right. Follow the money. Iraqi jihadists build up war chest. This is Agence France Presse. To trace the dramatic rise of the Islamic State of Iraq and the Levant, the jihadists that have spearheaded an offensive that has captured swathes of territory, just follow the money. Combination of racketeering, kidnapping for ransom, and other criminal activity, as well as donations from wealthy private individuals in the Gulf. Group has built up a financial war chest that is the envy of militant groups the world over. Recent takeover of Iraq's second city, Mosul, it has further bolstered its finances and capabilities. There was a hell of a payday, says Toby Dodge, head of the Middle East Centre at the London School of Economics. And then saying that in addition to military equipment, vehicles, Iraqi soldiers abandoned when faced with the insurgent offensive. The assault also yielded monetary rewards. Nineveh Provincial Council Chief Bashar Kiki told AFP the city's banks had around $400 million in cash reserves. According to various sources, the group was raking in up to $12 million per month on extortion, ransom payments, and corruption in Mosul. And saying that basically ISIL has a long history of raising funds through criminal enterprises. They are unique in terms of their abilities to go through an insurgency, control territory, critical infrastructure, and natural resources. That really is a significant departure. I think putting Humpty Dumpty together again, i.e. Iraq, is a very unlikely outcome at this juncture, and that's based on the balance of power. I can't see ISIL pushing forward much more. I think Baghdad is a very different kettle of fish. The Shias are in a majority and are unlikely to roll over. This lightning strike was through Sunni territory, who were largely sympathetic to some degree with ISIL, and therefore I think it's a stalemate now with outsized fragmentation risks, a Kurdish state, a Sunni state as it were. Hassan Nasrallah said, "Trust me, the magic will turn against the magician." I'm not sure it will, but that's a good turn of phrase. Then Pepe Escobar saying, "Even minimal coordination with America at this point is tantamount to falling into a deep and dangerous trap for Iran," he says, and I think he's right, because Iran is largely encircled. To get into sort of a collaboration at this point over Iraq, I think would further weaken them. But having said that, there is still a rapprochement on the background. Let's see how that continues to play out. And then that takes me all back to 1984. Oceania was at war with Eurasia. Therefore, Oceania had always been at war with Eurasia. The enemy of the moment always represented absolute evil, and it followed that any past or future agreement with him was impossible. These are the words from 1984, George Orwell's fictional novel. Terrorist groups have been smashed in Xinjiang, China says. This is the New York Times. Officials in the western Chinese region of Xinjiang said Monday that an anti-terrorism crackdown that began in late May and resulted in the smashing of 32 terrorist groups and the sentencing of 315 people to prison terms, death row, or other punishment, according to state news reports. 120 separate court cases. Police confiscated 264 explosive devices, more than 3 tons of explosive material. And I wrote about this previously when I said, Xinjiang might well morph into China's Afghanistan. That was on the 2nd of December 2013. Currency markets, the euro is just around the 136 level, 135.94 when I looked last. And it's been on either side of 136 for a number of the last few sessions. Dollar index 80.30, it's been in this range. It hasn't been able to break through 80.85, which I think is a key area of resistance. Janet Yellen's been very dovish. I expect it to remain soft. Japanese yen 101.92, Swissy 0.8950, the pound 170.24. Touched 170.64, its highest since October 2008. I think it's going in pretty short order to 173.50. Aussie 0.9423 had a strong session a couple of sessions ago. Indian rupee 60.07, being undone a little bit right now by the price of crude oil. South Korea back on multi-year highs, 1017.47, the Rial 221.80. Egyptian pound 715, and the Rand, that's firmer now, below 1060. And I'm going to come to South Africa in a moment. Euro dollar, I'll put up a 3-month chart, resilient. Draghi's been trying to cap it, but it's not going down, is it, for now? Dollar index, and I think Yellen is doing some good work at capping this particular index. Sterling, of course, rose to 170.63 on June the 19th, strongest level since October 2008. And, that's climbed from a 3-year low of 148.14 on July the 9th. I put out a buy notice on the 12th of August 2013, and it was still around the 150 level. And I remain very bullish, as I was in August 2013 when I said, how does an investor play this recovery? I think you need to be net long sterling. I'll put up a 1-year chart. I think 173.50. 173.80 is the next objective, and I think there is a likelihood that it can go to 221. Gold 13, 15, 10, I think you sell rallies. It's gone a little bit higher than I thought it might, but of course we've had some major geopolitical news, and that's what's driven it higher, but I don't think it's going to hold above here. I think it continues to be a good sell above 1300. Crude oil, I'll put up a 5-day chart. The situation in Iraq will keep this on the boil, notwithstanding a little bit of a drawdown yesterday, probably a trading buy right now. Dubai, this is extraordinary. Stocks have entered a bear market, and that's notwithstanding that even after this drop, putting it in a bear market, Dubai's index remains the world's top performer in dollar terms, among more than 90 tracked by Bloomberg. It fell 4.3% yesterday to 4296. That's entering a bear market after falling from a high on May 6. On that note, I'll put up a photograph of the Burj Khalifa that I took when I visited, and another one of Dubai from the sky, which I took from another time when I was passing through. Coming to sub-Saharan Africa, rebels boycott South Sudan peace talks over who attends. Rebels have boycotted a new round of peace talks to end South Sudan's conflict because of a dispute about who should attend. Those involved in the protracted negotiations said on Monday new round of talks in Addis Ababa was to have brought in new players such as civil society organizations, faith-based groups and others, along with government and rebel negotiators to try to secure a broad deal. There has been little to show for months of negotiations. 2 ceasefire deals were swiftly violated, each side blaming the other. A new delay in talks threatens to extend a crisis that aid agencies could drive the nation to famine. Machar spokesman James Gatdet said rebels stayed away because civil society groups from abroad were not included, while those he said were aligned to the government were there. And then the government saying it's a delaying tactic. Other officials talking about a new sanctions regime. I think it's just very binary, and until that thinking changes at the very top between the two antagonists, it's all going to be a jolly rigmarole, and the collateral damage is just frightful. The South African all-share eased off an all-time closing high. It's up 10.381% this year, and a very strong performance. And I wrote about this on the 7th of April 2014, and the index is up another 5 percentage points since the time I wrote that. And it was snapshots from South Africa and its role in Africa's economy. And I said, interestingly, South Africa Inc. is taking a much more forward position across the continent. The South African rand has been a global proxy for risk. It still is. It's practically a knee-jerk reaction. If the world looks a more dangerous place, people the world over just sell the rand. And similarly, folks buy the rand when folks feel confident about the world. The rand fell about 20% in January 2013 through February 2014, and then subsequently started to rebound and base out. I said I think the adjustment low in the rand is set to prove quite supportive for South African exports. The rand appears to have snapped a more than 12-month downtrend, and that's why I think it's more likely to go to 10 than 11. And I said that's a constructive forward indicator. At the time I wrote this, which was 7th April 2014, the South African all-share was up at a record, but only up 5.83%. It's now up 10.381%, so it's continued to rally. And I concluded today, I took a more constructive position on South Africa in April. I thought the economy was trundling along at the bottom and that the next move would be higher. Notwithstanding the behind the curve, in my view, ratings downgrades we saw last week, which came subsequently to me writing that article, I think South Africa's basing out. I'll put a photograph up of the Johannesburg sunset I took when I was visiting with RMA. And just tell you that the South African Mining Union has included a back-to-work arrangements in its rally programmer, so signalling that long-standing strike might be finally coming to an end. Put up a photograph of miners on strike chanting slogans as they march in Nakananeng Township in Rustenburg. Dollar rand 10.60. But I think it's even firmer below 1060 now. The Egyptian pound 714.93. We've been here for a while. The Egyptian stock market up 22.4601% this year. Nigeria all share up 0.6% this year, and of course has rallied something like 10% since the last 8 weeks, and if you just go and overlay the news flow about Boko Haram, it speaks to new resilience amongst African stock markets. Nigeria and Kenya refer. Ghana's stock exchange composite index is up 10.396% this year, but bear in mind you've lost all that. Billionaire Leviev said to strike Angolan diamonds deal. The Israeli real estate magnate will be able to sell gems from his luminous mine on world markets instead of at a discount to specified Chinese and Dubai traders, said the people, who asked not to be identified as the accord isn't public. The deal may allow Leviev to raise prices by as much as 50%, according to two of the people. That's interesting. And will support increased investment into that sector in Angola. Angola is one of the last great diamond frontiers, frankly. The multi-currency regime is here to stay. We cannot talk about introducing a local currency until certain macroeconomic fundamentals are right. This is Chinamasa in Zimbabwe, saying that its priority was to build up reserves, whether in hard currencies, gold, diamonds or platinum, core requirement of the IMF, and one of the several vital steps that need to be taken before Zimbabwe can hope to resume funding programs with multilateral institutions. External debt stands at $6 billion. We need complete overhauling, complete retooling. The manufacturing sector is not on its knees, it's on its back, he said. And I wrote about this on the 3rd of June, when I said, interestingly, you will note a linguistic inflection point in Zimbabwe of late. That's further proof of that. And I was referring to my friend Domenico Fanizza, and he has been in Harare and reaching out, and I think you're seeing the fruits of that outreach. The Uganda currency plunged apparently as anti-gay law prompts US aid cuts. Lowest level in 9 months, fell 0.8% to 2,610, lowest since August 26. Has fallen 6.1% since Yoweri Museveni signed the bill on February 24th. That's the biggest faller after Ghana's City. And it was actually up 3.1% in the first 7 weeks of the year. So you can see it's lost all of that plus more. And the US announced they're cutting off donor funding. The DRC state-owned mining company said it needs $160 million to implement a plan to fire about 6,000 people. That's on Bloomberg, if you care to have a look. Very interesting article I came across in ISS Africa. Kenya's dilemma in Somalia. Let me go through it a bit. It has been almost 3 years since Kenyan troops were deployed into neighbouring Somalia to create a security buffer zone on the Somali side of the border. The main aim at the time was to reduce growing insecurity in Kenya, which affected the country's economy and the tourism industry especially. Since the deployment and the subsequent integration of Kenyan troops into AMISOM in Somalia, the goal of reducing insecurity is yet to be realized. Instead, insecurity that is attributed to the very presence of Kenyan troops in Somalia has continued to rise, indeed, the frequency and intensity. Recent attacks on 16 June in Pekatoni, Lamu County, in which more than 60 people died, is yet another reminder of the increasing number of terrorist incidents that have taken place since Kenya's deployment in Somalia. Despite the ongoing debate between government and opposition groups about the cause and perpetrators of the Pekatoni attacks, Kenya's presence in Somalia remains an important variable. Prior to the Pekatoni attacks, the dilemma of dealing with Kenya's presence in Somalia was firmly under discussion in many policy circles. One school of thought holds that Kenya should withdraw, this is the erstwhile Prime Minister, while another argues otherwise. CORD and its leader Raila Odinga reason that Kenya's presence in Somalia has brought insecurity. Kenya should therefore withdraw. According to this argument, radical Somali Islamists will have no reason to keep targeting Kenya once the country's troops cease operations in Somalia. This is interesting. Supporters of Kenya's continued presence in Somalia include the Deputy President William Ruto, maintain that withdrawing would mean succumbing to the demands of Islamist militant group Al-Shebaab and expressly conceding defeat to terrorists. If Kenya's presence in Somalia were as irrelevant as Al-Shebaab would have the world believe, the group would have ignored their presence rather than insisting the KDF withdraw. This second school of thought therefore believes the KDF's presence in Somalia has contributed to the strides made in the stabilization of Somalia and successes. The country therefore finds itself in a catch-22 situation to withdraw or not to withdraw, each of which poses enormous implications for the security of Kenyans as well as the future and stability of the country. The position of the government of Kenya is unequivocally not to withdraw, at least for the foreseeable future. Even if Kenya were to withdraw, there is no proof that Al-Shebaab would cease its attacks. Rising insecurity would in turn have disastrous repercussions on FDI, investor confidence, Kenya's vibrant tourism sector, no more, and associated political costs and pressure from citizens. Already, the Pakistani attacks, for instance, created political damage following blame shifting between the government and opposition groups regarding who is responsible for the incidents. Opposition groups are trying to harvest political capital from these events. The government has also been quick in blaming political rivals for fomenting trouble to make the country ungovernable, and paint the Kenyatta administration as a failure in the eyes of citizens. At the heart of the blame shifting is the crumbling of unity of purpose and the politicization of efforts, with dire implications on domestic attempts to address insecurity. Citizens are increasingly fed up with the rising insecurity without clear hopes or indications of improvements in the near future. While Kenyatta's administration grapples with the ICC question, the government's worst nightmare will have to be a hugely disgruntled domestic constituency. On the other hand, if Kenya were to succumb to the pressure to withdraw, this would also come with costs, apart from adding itself to the list of countries that have burnt their fingers in Somalia. A knee-jerk withdrawal from Somalia without a proper exit strategy would be problematic in a number of ways. Saying the country cannot afford to be absent in a context where Burundi and Uganda are clearly playing important roles in the quest for peace, such an absence would directly erode its influence, soft power and political clout in the keen contest for regional leadership. Talking about the security vacuum if Kenya were to withdraw, saying the option of withdrawal is therefore not easy. Politicizing security issues, as has happened after the Pakistani attacks, this is, I think, important, is counterproductive to collective action and building political consensus for addressing insecurity. It is also important that Kenya does not blame all that happens on its territory on Somalia. Despite Al-Shabaab's influence, it is debatable whether Al-Shabaab directly planned and executed all the attacks perpetrated in Kenya in their name. There is a case to be made about the challenge within Kenya itself. Kenya's greatest vulnerability to the rising insecurity is as much a problem with internal weaknesses, good point, fault lines at the heart of the capacity of the state, another good point, social tension, and citizens' disengagement from the state. The threat of Al-Shabaab in most cases is mostly in its exploitation of these vulnerabilities that require urgent attention domestically. Fantastic point. I said, excellent essay. I said, a withdrawal at this moment with Kenya's tail between its legs is simply unconscionable. I appreciate that erstwhile Prime Ministers snagging votes, but I think that call was a cheap shot, the one to withdraw. The main issue has become a very political and plain uneven approach to a problem that has gained intensity and frequency. Confidence levels around the CS for internal security probably rank at the lowest the world has ever seen anywhere. A credible response cannot start at that letterbox. It is no longer politically feasible. More than that, there remains a sense of deep unease around the government's communications. Kenya has been in a goldfish bowl since Westgate, and we have peddled narratives which have not been credible too many times. Furthermore, at a very tricky moment, we seem to be willfully alienating those who have the most capacity to help us. Our old traditional allies, this chippiness and an inability to reach out, even if it is in a Sun Tzu manner, is worrying. We need to beat back this asymmetric threat urgently. We need all the help we can get. That's what I think. I'll put up Westgate, a photograph I took 273 days ago. I'll put up a link for the article I wrote. The dashboard is blinking amber when I said Don DeLillo writes in Point Omega, when you strip away surfaces, when you see into it, what's left is terror. This is the thing that literature was meant to cure, the epic poem, the bedtime story. And so there is an enormous conversation and hullabaloo going on, and we search this for signals, and the signal is very loud and clear and unanimous. We are being spun an epic poem, the bedtime story. Disbelief can be suspended, but eventually we reach Marx Brothers in duck soup moment. Well, who are you going to believe, me or your own eyes? And if you mind social media like I do, you will know that duck soup moment was crossed during Westgate, and continuing resolutely down this path is eroding political capital. And I closed up with Malcolm Gladwell, look at the world around you. It may seem like an immovable, implacable place. It is not. With the slightest push, just the right place, can be tipped. I wrote over the weekend about how post-Eurobond Kenya exists in a goldfish bowl. And in that piece I said, according to my sources, more than $5 billion of orders came out of North America, which is something to consider, and I'll come back to that in a minute. Then I learned that 66% of the more than $8 billion of orders came from North America, 17% from the United Kingdom, 13% from Europe, 3% from Asia, and 1% from Africa. And I think, that speaks to the fundamental disconnect in our foreign policy between our economic interests and, the situation as we find it, which is this incredible chippiness towards traditional partners. Interesting tweet out of a chap called Simon Adams, R2P. He says at least 20 killed in Kenyan intercommunal clashes over access to land and water, R2P. Then we learned last night, I'm aware, that a gang that is unknown attacked Tower Village in Witu Division yesterday, Monday night, and killed 5 people. And I wrote about R2P in October 2011 in the context of Colonel Gaddafi, when I said it's a very powerful tool, and that piece was called Gaddafi's Body in a Freezer, What's the Message? And I was concluding that the R2P tool tilted the pitch big time. Very interesting interview by Kiprono Kitoni, Kenya's private sector concerned over the growing trend of insecurity. This is on CNBC. The link is on Rich Wrap-Ups. Uhuru Kenyatta has offered Turkana landowners oil pipeline shares in Wayleave's deal. I think that's clever, gets them invested. Kenya's shilling was lost at 87.394. The worry for the shilling remains the price of oil. The Nairobi oil share up 9.89% in 2014 and just 1.6375% below a record high set last month. NSE 20 down 1.6849% in 2014, but has rebounded 79 points since closing at a September 2013 low on the 17th of June last week. Nairobi oil share was 0.3% firmer yesterday. NSE 20 firmed to 0.3697%. Diamond Trust and Jubilee scored fresh record all-time highs. Kengen, and it's still rebounding, has rebounded 13.586% over 2 sessions. I think the equity market rebound has further to run, and I expect we've got a meaningful bounce that's beginning to get going here. Once again, thank you for stopping by.